The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday, noon until 1 p.m. at 877-927-6648. Very interesting. Dow squeaked to a new high today. And let's go through the numbers real quickly, and then we can go to the different chart formations. The S&P E-mini is up 14 at 27.07. That's very good action. The 120-minute chart is in leg D, and the daily has a D count, but what I'm really looking at here is at different levels, and I think that we can do it very nicely if we're looking at the Dow, because the Dow, having just gone to the 24,909 level, is starting to show deterioration in the moving average convergence divergence in the daily. That's the MACD. Stochastics dipping. On balance volume is good. This is a real struggle to get to the new high. And from my perspective here, well, we were short. We just got stopped out by 1 penny in our short position for about I think it's less than 1%. It's probably about 0.8% loss. But I'm looking at this and I'm saying, this is a very interesting chart formation, because you're starting to move to the right. And look, right here, when the Dow made its high of 24,876, the MACD was at its strongest level. The stochastic was good. It wasn't as good as it was back at the peak D at 24,532 on the 4th of December. But still above 80%, and now it's at 83%. On balance volume hasn't made a new high, but it's in good territory. So what I'm looking at here is I'm looking at a market that's moving higher, almost reluctantly. Look at these little candles here, then the sharp down move late Friday. That was maybe a big block selling or whatever it is. But we've held this 9-period exponential moving average, this black line in the daily, and that's really important. Way above 24,273 in the weekly chart, having extended. I just need to look at this, 76, 71. So this is now a leg E in the weekly chart, the one that we just made moments ago, an hour ago. And everything I'm looking at is suggesting that there is still a very good chance that overall we're beginning to start that pressure where there's an upside cap, kind of way I'm looking at it right now. Intermediate term is still a very exciting thing. I mean, for some subscribers who still have a position in the Dow from 22,290s, this is a core position. What's really interesting is that within the context of the different markets, there's been this rotation. And even today, when a stock that looked like it was becoming quite tired, an IBM, which was really pulling back quite sharply, back deep down into its consolidation area, suddenly spikes 5.28 up at 159.50s in a leg D in the daily. And these isolated events make a big difference. So here we are. We're looking at the numbers. And as far as I'm concerned, for this first week of January, what we need to see is a close. Any close that goes into the 25,000, I'd actually say 25,100 area, says no. There is going to be a minor pullback, if at all, and that buying is just going to constantly come in. But the way I'm looking at it is that there are a lot of stocks that have had absolutely spectacular moves. Look at this, a Home Depot. This is a Dow stock. Look at that weekly chart. Huge leg to the upside. Look at the monthly. Spectacular move. And the daily has gone to a D and it's pulling back. D is where we start to become cautious in the Chapman wave. So I'm looking at this and I'm saying, in this rotational aspect, IBM yesterday was just a non-event. Today it's a big event. And as long as there are these rotational sector plays, it says that there's going to be some kind of support for the Dow, and that support now, let's go back to the Dow. At this particular point, the 24,600 area is really going to be very important for a number of reasons. If there is a close under 24,000, I'm making it 24,550. If there is a close under 24,550, so that's 300 points away from where we are right now, in the next week and a half, going into next week, giving it a full 2 weeks worth, well, it won't be a full week because it's a shorter week. Well, let's call it 2 calendar weeks. That would say to me that yes, January is going to be a consolidation phase. And I'm wrong if it goes into the 25,100s. It must close nicely into the 25,000s. Because at this particular point, for the amount of time that we've taken for a market like this, in the Dow in particular, not to have broken into the 25,000s is suggesting that that 25,000 level is really something to monitor. Upside, 25,100 in the Dow, close above that, really positive. The close below 25,550. Now, of course, you've only got, what is that, 200, yeah, it's about 200 and something points up, 300 points down. That's the way I'm looking at it. And I'm talking about it as a relationship into January's move. S&P right now, the SPX is trading up a lot stronger than the Dow. It's up 0.44%. Dow's only up 0.17. And this is a good move at 2707. I said to subscribers, if the S&P goes into the 2703s, that's really very good action. So here we are at 2707. It is good action now. It's leg D in the weekly chart, very strong technicals, and the monthly chart is extended now into January, into 2017, still in leg D in the monthly chart. Very good action. What this does say now for the S&P is that the low that was made on Friday, that is sacrosanct. Why? Because if there is a close below 2673, that's a long way down now, but 2673, that's suggesting that that consolidation will go on for quite a bit of January. All right, QQQs also broke out. Horrible action on Friday, went to a lower low, had that peak E at 158.77 in the Chapman wave back on the 18th of December, pulls back sharply, and then suddenly yesterday, a whopping big candle. Today breaks out to a new recovery high, new to all-time high. It's trading at 159.73, up $1.24, and the weekly chart is very strong in leg E, and the monthly chart is still in leg C. And one of the reasons why, even today, we're looking to go long, let alone we're looking at some short positions potential. But yes, there are still areas that are looking as if there is enough upside to really want to participate in a bifurcated market, that some sectors could be pulling back coming up shortly, but at the same time, there are some strong sectors. So let's go to the QQQs. A trade at, it's a 159.74. A trade in the 160.80 to 161.25 area over the next few days would be very, very strong action. A pullback today we gapped up. So a pullback under today's low of 158.61 says, okay, watch out for that 158 area. That must be support over the shorter term. We'll come back and we'll go through all these different sectors. Yes, good question. IYR is the real estate, the REITs, iShares, not acting very well. I'll be right back. Now,
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back. Dow's up 49. S&P's up 11.5. We're looking at IYR, which is the iShares Dow Jones U.S. REITs Index Trust, commercial properties. I had spoken about this a while ago when I was asked the question. I said, this is the most unusual chart formation. I don't recall ever seeing a weekly chart with a zigzag in an up channel as vicious as this, even though it's only between, there's actually only about 6 points between the low and the high. Actually, what is that? Let's go to that, 81 to 76. Yeah, about 5 points. Each one is 5 points, up and down, up and down, up and down. Going to the top of the range, in this case, we call it, make this green. I don't like to make it messy, but let's just do this because it's a nice demonstration of a technique that you might want to use. So this is what I call the Chapman Wave inside track repellent zone. Right there. Every time the price got to that level, it reversed back. And so far, it's held very nicely the inside track support level. And now we're going to make that green and say, okay, every time it gets right about here, that's when it starts to find some support. So I'll give you the levels to look at. It's acting very weak right now, down 22 cents. The 80.38, I say very weak only in the chart formation, not price-wise. But the weak part of it says that between, if it's this week, between 80, let's go into next week, between 80 and 79.60, that should be the containment area. This is the deepest that the stochastic has pulled back, and in a sense, the MACD, this is the longest that the fast-moving average, the green line, 9-period differential, has pulled back. So this says it could go a little deeper, and now look, has made a peak E, if there's no new high in January, above 83.27, the high of December. If there's no new high, this is going to intimate to us that it's going to try to test lower levels towards 78. So yeah, I'd be careful here. Do I have a sell signal per se? Just a very short-term one saying you can go from 80.30. Let me clarify. It is in a sell mode in the daily. This is an arch formation failure pattern. It goes deeper if it breaks from 80.37 now. If it goes closes under 80, there's a good chance it's going to retest the low of 79.28, and that's going to be really important. Upside, you really need to break into the 81.50 area to say, now we reverse trend once again, but this doesn't usually reverse trend without some kind of a pullback. It always makes the H pattern, but usually a successful H. Well, not always. Within the up track, it is. So yeah, those are levels to watch. IYR. I'd just be a little careful now. If you do own some, I wouldn't do anything right now. Let's see what happens at 80, between 80 and 79. So that's the way we're looking at that. Next thing is I was asked about the IYT. IYT is a transportation index. Now look, MACD is still okay, but it's turned down quite sharply, but it's just gently positive. The stochastic is still good at 81%, above 80%, but it is making lower lows. On balance, volume is pretty good. That weekly chart, let me just double check here. 28, yes, this is in a leg E. So I'd be a little careful. I think that the IYT, that's the iShares transportation index, is getting a little bit, can I call it toppy? Yeah, I can call it toppy. I'm just saying that it needs to break into the 196s, and it's at 194.86 right now, down 20 cents. It looks to me like it's just chopping sideways, could go in a rectangle formation. At any point, if the IYT closes below 190, then you're starting to look at a sell signal. That's probably going to go very quickly to a sell mode. Watch that weekly chart. So what do I see right now? See somewhat of a limited upside, but I'm really monitoring to see whether or not the weak technicals will drag the price down. So a little doji candle right here, watching that one very, very closely. Next thing I was asked about, let's go to, well, I'll go through the routine. Gold, up 2.4 at 1318.4. Single leg A, it goes all the way from the just under 1240 to where it is right now at 1318. That's a big move, 60 points. And what's really important about this is that the right side of this particular pattern is above all those peaks C1, C2, C3s in the 1306 area. Here it is at 1318. So this, yes, it has a single leg characteristic, but it's made a higher low. So now I have to respect that, and I have to respect the fact that the monthly chart is saying, hey, I'm nicely above the 9-period moving average. Maybe I'm still in the trading band, but this band is playing some good music. But it is a single leg A. Stochastic is really strong at 97%. MACD is good. I'm waiting for a pullback. If we get a pullback, we will decide whether or not we're going to join the crowd here. It did do a left side, right side price time match. Very, very good action, no question about it. Look, this is a single leg A. So for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, and today's the 14th session of consecutive highs. That is really unusual action. And that's the reason I've been waiting for a pullback, didn't get a pullback. Now we have to make some decisions. But it is very good action. If you look at silver, silver's had pretty much the same kind of pattern. But it has made peaks. It's made a peak A, a peak B. Now it's in leg C above the 200-period exponential moving average. And I'm suspecting that over the next week or so, it could go a little higher, but there's a good chance it's going to do some testing of the 1724 right now, testing of the 16.80 to the 16.60s. That's the way I'm looking at it right now. Weekly chart isn't as good. It's got a H that goes to a W formation. That part of it is good. But it really needs to get to the 17, I think somewhere around 1756 area would be very, very good action. Not far away, but it hasn't got there yet. Next thing I want you to do is crude oil. So crude oil right now is trading at, is trading up $1.19 at 61.55. And that's gone right up against the trend line, the Chapman wave left side, right side price time match. Look at that V-shaped pattern. And it went through exactly from the high that was made back in December, the week of the 16th of 2016 at about 59.63. Remember, this gets smoothed out down to the low that was made at 43 on the week of the 23rd of June, 43.42. It's taking that exact number of bars yesterday, and it spiked right through that left side resistance level, now it's the 1 bar extra, and it's gone much higher. But you see this Chapman wave inside wedge, target, repellent line. It stopped dead at the line back on the 24th of November, week of the 24th of November in the 55.70s. And now, and then it pulled back, held the 9-period moving average. Now it's spiked up to the 61.50, 8 level, right up against resistance again. But that makes the weekly chart, the monthly chart, very positive. Very nice W formation there. So yes, crude oil is acting extremely well. Had a question about shorting. No, this is not a short. This is an leg C in the daily chart. Let's go on. We want to look at high-grade copper. High-grade copper is down and made a peak C, and this is kind of what I'm anticipating is a possibility in the gold. Strong leg up, and then takes a little time, not that much in price, but a little time, and pulls back. We're going to be watching this very closely at 3.25 down a fraction. It's just above the 9-period moving average. I think it's getting ready for another bit of a pop, and that should go to a D, and then it might take a deeper time out, both in time and maybe price. So we'll get to the TLT, which is bonds, which are up 51 cents right now. Be right back. Dow's up 49, S&P's up 12. Basil Chapman, Tiger Technicians Hour. Be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, everyone. We're back. Just had a question about the E-mini. This is the 5-minute chart. 5-minute chart has this level right here of 2708.50, little double top between 1045 and 1050. And that's creating, as you can see in the 10-minute chart, a rectangle formation. It was starting to form a cup formation, an arch formation, held the 9-period exponential moving average, now is going back towards the top. So the pattern that we're looking at in the MACD for the 5-minute is suggesting that it's flattening out. It needs to cross, the MACD needs to cross positive. That'll push it to a new all-time high. and stochastic at 91% is very good. So that's what's needed so far. The MACD has not crossed, and the 10-minute chart says flat. It picks up the last arrow, which so far is the down arrow, but it could still go higher because the stochastic is at 86%. Those are parameters to watch. A push above 2709 immediately says 2711 would be the next resistance area, and key support would be 2707. Let's go back to the story of the bonds. So the TLT is trading at 126.01, up 52. My contention here is that just for this period right now, the next 3 to 5 sessions, we're watching the parameters of 127.50. A break above that would be very positive, and a break below 124 would be quite negative, actually, because it would target the 123.04 200-period exponential moving average. And that would say a push above 127.12 starts a leg A, B, C. It starts a leg D. It's a gray D because it's way under the 128.23 high that was made back around the 18th of December. That would be a big positive, but at the same time, just be careful because a break under the candle of yesterday's low, 125.07, says no, not ready yet. But I contend that at least for now, let's have a look at the TNX. I was asked when I look at the 10-year. Okay, 10-year TNX is. Yep, a peak C. This is a pattern that we always look at. I immediately grab the top lines and say lower highs and much lower lows. And that says very clearly that if the 10-year yield, this is the yield at 2.42, 24.42, if that yield can spike above 24.80, that was yesterday's high, there's a real good chance it's going to try to tackle the 24.99 high that was made on the 21st of December. 1 penny above that goes to D. That's the way we're looking at that. So, so Dick Cruel, high-grade copper, did that, did once, IWM, could not get, even today, could not break and hold above this trend line. I spoke about it yesterday, peak C1, peak C2. My contention was that this is really a double top. You could even make a peak C3, I said, slightly lower. Most importantly is that the weekly chart in D/B says D is very, nothing wrong with that if you don't break below the 9-period moving average, and so far this is very good. MACD is good. Stochastic starting to slip. It's under 80%. So when I'm looking at this, I'm looking at it and saying, okay, it's very clear. It's not much to go. It's at 153.63. All it needs is 155.41. That's less than 2 points, and that shouldn't be difficult if this is going to be a breakout in the iShares, the Russell 2000 ETF. But it hasn't been able to do that. And so far, I'm looking at this and saying, this is part of what I've been looking at to say, I see enough areas struggling that I think that we're going to have some kind of a cap to the upside here. We need a digestive phase. I'm not saying crash, I'm saying a digestive phase. And we'll see if that unfolds. Then the question I had was, would I look at the EEM? This is the emerging market ETF. This is in leg D right now. This is a very strong move. It's very interesting because over the weekend, as I was looking at the foreign markets, it was surprising to me to see that their daily, not the weekly, but the daily charts were really out of sync. They were just not looking very good. So now what do I call this? This is a leg D in the monthly. Finally, we've got that leg D in the emerging market ETF, trading at 48.44, up 43 cents right now. Boy, A, B, C, D. I'm going to call this a D/F. Both of them say be careful, it's a little bit toppy here in the weekly chart. MACD turned around sharply, but it's really quite negative. The stochastic's way down at 66. This is very interesting. New highs, and we had quite a bit of a pullback. It's one of the deepest pullbacks we'd had in the EEM from the high that was made the week of the 24th of November at 47.93, and then it goes down to 45.05. 2 weeks later, the week of the 8th of December, that was one of the deepest moves. And then all of a sudden, buying comes roaring back. And that's the issue right here. Is this a market now that says, hey, we've missed we've missed coming in. People have been maybe slow to getting into the market. Now they're deciding, they're hearing it on the news. Everyone's saying, hey, the stock market, and now they're coming in. So is this really the start of another move to the upside with a new bunch of players? Or we're looking at this finishing up a move and saying, look, many stocks, many sectors are overbought. We need a timeout. So this is a leg D, but the MACD is at 90. MACD is very strong, and stochastic 91%. It doesn't just come back straight down from here unless it's really bad news, and we haven't had bad news. So far, EEM very strong at 48.44. Daily broke out. Key support will be in the next 2 weeks. If there's a crack and it breaks under 40, closes under 48.44. If it closes under 46.80, that says, okay, the timeout is underway. That's what it's saying. Okay, and the next question I had was, let me just try to find, XLF, of course, XLF. XLF this is very interesting. Sideways move, struggling. It's gone out of the oval pattern. This is really an extended oval pattern. It has not broken to the upside, but it hasn't broken down. At 27.99, the financial S&P Select Financial, this is a SPDR fund, 27.99 up 7 cents, stuck right on that 9-period exponential moving average. MACD is very negative, stochastic is very negative. Price is holding up. Now, my contention always is, if the price doesn't follow the technicals, that's an aberration. One of them has to give. Watch closely to see which one plays catch-up. In this case, the price hasn't played catch-up, so we'll see if the stochastic and MACD are able to turn up. But this is just a stalling action. XLF, I was asked about something else. What was I asked about? In New York Stock Exchange, NYA.X. New York Stock Exchange making a new all-time high. 12,866 was the high on Friday. Now it's at 12,941. That's a big move up. Leg D in the, this is one of those where I don't really have a question with it. This is a leg D in the daily, leg D in the weekly, and a leg D in the monthly. And that monthly is extended into January. Oh, that's fascinating, huh? D. So we're looking at this. I'll give you parameters. A push into the 13,000 in January says that this is 2,000 stocks. This is really good action. A pullback that says it closes under 12,000. 12,836 is the 9-period exponential moving average. A close below 12,780 says nope. Now it too is going to join the band if there is a consolidation coming up. That's the way we're looking at it. I'll be right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Yeah, so I was asked about a Goldman Sachs. So this is so it makes a peak D on the 4th of December. That's the 4th highest peak. Pulls back very sharply from 108.40 down sharply for this stock because it hasn't had such big pullbacks. Goes to 103.73, and then it goes peak A, B, 108.46. Today's high is 108.49. So here we are. We've got a brand new, so it goes very quick. Sell signal. Doesn't even get to a sell mode. Just goes sell signal, recycles up A, B, C, and JP Morgan is in leg D, really struggling at this point. And that would make it an F, I believe, in the, I think it's an F, yes. An F in the weekly chart, and only a C in the monthly. Now, this is going to be very interesting because Goldman Sachs, which had a really good U-shaped pattern and broke out and went into the 260s, they actually went to a high of, this is a high of 262 round number high. Oh, I remember that. 262.09 and 262.14. So it went to a peak F just above that round number high. It isn't breaking down, but it's not breaking out with the general market. This is a peak F in the daily, acting kind of weak here. MACD down, stochastic down, price down. The weekly chart made that cup formation. It was actually like a double cup formation. Went above the 255.15 high of, I think it was March of last year. And was it this March of this year? And then ran up and broke out and went to the 260, what did I say that was? 262.19? 262.14 area. So 262.14 is the high, but the monthly chart is only in leg B. So Goldman Sachs is having that breather. This is kind of what I was expecting of the market, to have a bit of a breather sideways. Some will go a little deeper than that. Many might just go sideways. Take time rather than price. This is what's happening in the financials. That's why I do think financials are going to be the place to be in a little later on. And we're still holding our financial long. It's done quite nicely. Watching this very, very closely. Next question I had was the OIH. OIH is the oil services market factors. Gone to a very strong leg E. Made that cup formation, broke out. This is actually a B in the weekly chart. A lot of work to do in the monthly. And one of the reasons why we wanted to get into something that has to do with infrastructure here is that a lot of the sectors that had done very well at some point in 2017 and then took quite a bit of a breather are just starting to show signs of coming back. And that's saying to me that the rotation, even within the commodity sector, is going to be very interesting. So if you look at the TRCCI, this is the commodity, this is the Reuters, it's actually the Thomson Reuters Equal Weight Commodity Index, powerful single leg A to the upside, breaks out in the weekly chart. This is looking like an E. Monthly chart, it's improving, it's not great. But this daily is really one of those spectacular moves. A lot of it has to do with crude oil, but look at that. We have been in one of these commodity ETFs. We had very nice gains. We took the profits, and then it pulled back very sharply, and then also has now had this extremely strong single leg to the upside. I need to watch these carefully. Is this the break? Look, the MACD and stochastic are outstanding. Is this a break that says high-level consolidation? We have begun the big move, and that big move is going to not just impact the daily and the weekly, but the monthly as well. So this is something that I considered would be a factor in 2018. I thought it would be a little later. It's already started. It started in December rather than I thought a little later in January. That's fine. It's the move that I hadn't anticipated. Now the thing is to get into the right position. So the right position says that we've got to be watching the GDX, which is the gold miners. Little pullback here, making a peak B. But that weekly chart still, unlike gold, this GDX, which often leads the way, in this particular instance, is really just in a trading band and has a lot of resistance at the 24.43 200 period moving average, is at 23.56 right now. And the monthly chart has not improved all that much. And I want to see the gold miners. I want to see this particular ETF very, very strong at the third and fourth week of January. And that'll say to me, aha, now we're looking at inflation. And that would say to me that we've got to now be looking at the TLT probably turning down sharply, and the TBT, which is going to be going the way yields go, instead of being at 34.29, is up in the 36.5, maybe 37 area. That will be a big difference when yields really start to move higher. We're not getting that just yet. KRE, question about KRE. KRE is the regional S&P financial ETF. Just kind of stuck here at 58.88. Not quite as good a pattern as the XLF, but not a bad pattern. It's just, as I say, stuck. And as stuck says, it has to break 61.20. It's at 58.89 right now. To go even higher, that'll start leg D. And it needs to break, if it's going to break down, it has to go under 57.70. About a point or more, a little more than a point from here. And I say, nah, not ready yet. I do believe 2018, both the XLF and the KRE are going to come alive. But I'm not sure yet about the downside. I've given you the parameters to watch. Now, the question I had was, remember WOOD? This is the iShares. This is the iShares Timber and Forestry ETF. Look at this spectacular move. It really looks like one of those commodities that we saw, like the crude oil and the others, breaking out in the A, B, C. Was that 71.28? 71.36. No, it's just continued. So I'm not sure this is really a G. Gs are very unusual in weekly charts. I always like to think of them as doing, like, even there was a G, but when G SLE finally went to a D, pulls back D, I feel comfortable with. So this could be A, B, C. This could be G/C. And this is really good. It means that worldwide, the global timber and forestry ETF is really on fire. It's doing very well at 72.48, up 30 cents. A very nice action. Let's look at the home builders at the index. Excuse me. All right. Whoa, look at that breakout on the index. So this is a leg D to the upside. Thought I'd use my power button on my microphone, but that didn't work. I don't think it did. So we're looking at leg D in the daily HGX, and the MACD just crossed positive stochastics at 87%, and that extends the weekly. There you go again, G/C. This is really very good action, no question about it. and the Philadelphia housing sector monthly chart, F/C. All of this is very good, and it portends well for the home builders, and says that maybe the rates will stay lower for a little while longer. Basil Chapman, Dow's up 71, S&P's at 15.5. Yep, 15.5. I'll be right back.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
So here we are, we're looking at the HGX breaking out to the upside up 6.51, 353.49 Philadelphia Housing Safety Index. This is going to be very interesting. So let's look at Toll Brothers. Toll Brothers, TOL. There we go. It is up sharply. So it had that very sharp pullback after the earnings at 51.08 on the 4th of December. And then it plummets down to the 45.35 area. And now it's in A, B, C. It's in leg D. Very interesting. Has it filled the? Yep, it's filled the gap. I'd love to see stocks that fill the gap. So this has to be one that we watch. Okay, and it didn't pull back. So it had this pattern that I call Chapman Wave Roman Candle. That was the week of the 4th of December. It does pull back sharply, and then it doesn't trade halfway into that wick for a period of time. It just nudges that and goes right back up. This is good action. So, up $1.52. Within the context of these different sectors, the SLX, which is the steel sector, has had a absolutely massive move to the upside. Is this an F? No, this is 4609, 4609, so this is still leg E. So it's had this is really talking to the issue of infrastructure, steel stocks. We still remain long steel, and I like this. I think that the V-shaped pattern in the monthly chart, this pattern right here, says that there's a chance that we could hit the 50.48 level over the next coming week or so, and then maybe get close to it. But there's a left side, right side price time match to this particular high on the 20. That was in April of 2015, and now this is the month that says, hey, this is the month that should try to test 50.48. I'm not sure if that can happen, but it's acting extremely well. So with that said, I want to say thank you for being here, and have a great day. I'll be back tomorrow. Check out my opening call. Hopefully you'll find it instructive and beneficial. Thanks for being here. See you tomorrow. Stay tuned for Steve Rhodes, Dave White, Tom O'Brien. See you on Thursday. Big snowstorm.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.